So we're recording.
Good morning, everyone, ladies and gentlemen. Welcome to a webinar. It's hosted by myself, Robert Grant from Initor Global, and our partners at Capium. You'll see from the headline slide, subject matter of the webinar today, making tax digital, income tax self-assessment. I'm going to give you a slight recap on that, just to remind everyone why we're on MTD for self-assessment. But also to provide you with some pointers for action plans going forward. So, title, Making Tax Digital Income Self-Assessment, Income Tax Self-Assessment, and Action Plan for Accountants. So, welcome everyone. Just a reminder, your hosts, in addition to myself, we have Cheyne from Capium, and I'm delighted to introduce Alan Woods and Adam Gunnell, who are practicing accountants. They run their own practices, and they will try to bring this webinar to life with some examples from their day-to-day professional life on how they're dealing with income tax self-assessment and MTD. So I'll ask Nick now to say a couple of words about himself before we get into the webinar for real. So Nick, it's over to you.
I'll be fleeting about myself. I've been at Capium for 5.5 years now, and I think I've dealt with Alan and Adam as well, and I think many of the attendees in this webinar. So great to have you all here. I look after product and growth at Capium, and hopefully throughout the course of this webinar, I'll be able to give you a bit of insight about what Capium's doing for MTD ITSA, and also to share with you a bit of an update from HMRC side of the fence. Just show how they're getting on with this kind of their development roadmap. Thank you.
Okay. Thanks, Nick. Just a couple of words about myself. My professional background worked for some of the big six audit firms in the UK. Probably my most relevant experience has been in the last 7 years when I was head of accounting at Crunch, one of the largest suppliers of software to individual clients. Has an accounting practice as well. But really importantly, we were involved in some of the MTD pilots for VAT back in the day. So I've got quite a lot of insight into HMRC's thinking at the time and how that's really been transferred through to MTD for ITSA as well. So just a quick recap on what the agenda is today. I'll have a quick run through where we are with MTD at the moment and how we got here, which taxpayers are affected by this regime and what records need to be kept, some of the submission deadlines, other deadlines and touch points you will have with your clients, and some HMRC expectations for both your clients and accountants, and some other points to note. The second part of the presentation is going to be a lot more interactive, where we have a discussion where I'll bring in Nick, Alan and Adam with some practical steps that you can take away from today's presentation. And feel free to put any questions in the chat. My colleague Mimi will try and harness those. And if we have one or two sort of searching questions, we'll do our best to answer those as we go along. So a quick recap as I promised. So the story so far. So MTD was introduced for value-added tax in a managed way since 2019. So I'm sure the majority of the audience will be familiar with the regime. It's now being extended to income tax self-assessment, and that should be effective from the 6th of April 2024. So the clock really is ticking on that looming deadline. Similar to the VAT regime, you will need to use HMRC compatible software. Now, I would imagine most of the software you're using at the moment for MTD for VAT will be equally compatible for the ITSA regime itself. Just one thing to note is that HMRC is constantly updating its guidance on its website. So I would certainly direct you there as a first point of reference for any emerging commentary or any emerging guidance. And also, keep an eye on your own professional guidance as well from FCCA, ICAW. They usually follow HMRC quite quickly and will give you some really good sort of bite-sized analysis of what HMRC's thinking is. And really, to accompany some of these developments, we'll be running webinars throughout the next few months, just to bring you up to date with any emerging guidance and any intelligence that we're picking up from our work with HMRC. So as promised, which taxpayers does NTD affect? So basically from 6th of April 2024, if you're a business with self-employed people, i.e. you're a sole trader, or you're a landlord with gross income or turnover above £10,000, you will be caught by this new regime. Now, please note the £10,000 threshold is the combined amount of income from relevant activities. So if you're a sole trader with income of £5,000 from that side of your business, and also a landlord with £6,000 from that side of your business, your total turnover or income will be £11,000 and you are caught by this regime. So those are relevant activities to use HMRC's descriptions.
Robert, are you quickly able to view the presentation as a slideshow, if that's okay? I think you should have an option to present.
Let's see.
I think it should be file view. Sorry, I think just there's a bit of feedback from the public.
Okay. Not sure.
If you look under the title of MTD for ITSA, I think looking at your screen it says view.
Let's have a look.
Yeah, so file edit, then I think it's view.
Slides?
Yes, please, buddy.
No, hang on. I'm sorry, that seems to ground to a halt for me. Control panel. No, sorry.
Yeah, if you want to just continue for now, and I'll look up.
Yeah, if you could, some of the other presenters could try and see what they can do. Yeah, some of the questions that are coming in, what will be sent to HMRC, etc. I'll pick that up during the course of the presentation. So sorry, I'll just pick up with the compatible software point. This will be largely the same as the software you used for MTD for VAT. Affected taxpayers won't need to submit a self-assessment in the usual way, but I will come up with the chronology of the information that you need to send to HMRC in a future slide. And multiple trades and activities will require separate submissions.
And Robert, in the top right-hand corner, can you see that button that said slideshow?
No.
I'm sorry, on the actual presentation itself.
Right. Let's have a look. Here with me.
Yeah, the right-hand corner, buddy.
Yeah.
Perfect. And then you should just say clicks. Yeah, do start from the beginning and we can quickly rattle through the slides.
All right, got you.
Perfect.
Okay. Sorry about that. I think we're up to date. So we'll press on. So what does HMRC expect from your compatible software? So you'll need to keep records digitally, and you need to submit each quarter a business update to HMRC using that software. I'll explain a bit more in another slide, exactly what those quarterly reports involve. You'll then need to complete a year-end reconciliation, known as an end-of-period statement, which is similar to a set of sole trader accounts or your landlord accounts, and you need to send that to HMRC each year. Then you complete a final submission and update process, which follows the current self-assessment tax return filing arrangements, but it's not actually a self-assessment tax return, it's a final submission based on everything you've submitted throughout the tax year so far. So taking that all together, you will have a total of 6 submissions to make. And that means a total of 6 potential contact points with your clients. Now, that's an important point to make because I imagine most of you, like the practice I used to be involved with, your contact point with your clients come towards the looming deadline of 31st of January rather than throughout the year. So you will need to think carefully about how you manage that within your practice if you're going to have contact points with your clients throughout the year. So just picking up on those deadlines. So the first quarter ends 5th of July, and you'll then have a month to submit those digital records to HMRC. And then it follows through naturally each quarter. And then you need to prepare your end of period statement. And that is for 31st of January, which really follows the same sort of deadline as your self-assessment on the outgoing regime. And then you make the final declaration as well. So those final two parts of the process, you would probably view as a sort of winding up arrangement with your clients. You will send them basically your draft declaration or end of period statement, and then when they approve it and believe everything is in order, that will be the final declaration that you then submit. So what does HMRC expect clients and accountants to do? So the software itself, it must create and store those digital records for each business transaction. You need to send those updates of the totals of business income and expenses every 3 months, and then confirm your end of period statements. So the final declaration, 31st of January, follows the tax year through either the compatible software, or that final declaration can be done through the HMRC online services account. Naturally, I think you would use the software just for consistency. You'll be using it throughout the year anyway, but you can use the online services account to do that final declaration. Other points to note, I touched on this earlier. If a client has more than one business, for example, they're a landlord and a sole trader, NTD for ITSA must be met for each business. That means practically you must keep separate records and make separate submissions for each business. So again, quite a lot of admin if you have clients who have multiple trades or multiple sources of income from property, for instance. And importantly, if a client receives property income from multiple properties in the UK, those properties are a single property business. So you can have 2 or 3 properties under the same reporting regime. But if you have a property outside of the UK, then there is one overseas property business to cover those properties as well. So you can see how the administrative burden is actually stacking up for those clients you have with relatively more complex sort of income sources and income streams. So that's enough on the recap. What I would like to do now, if it's all right, is invite firstly Nick, and then Alan, and then Adam, if you would just like to give us a bit about your perspective on the preparations being made to date around ITSA, and especially Adam and Alan, anything you're doing at the moment with your clients would be really useful. So pass over to Nick, if that's all right, and I hope everything is still on the straight and narrow with the presentation itself. So over to you, Nick.
It's looking great, Robert.
Yeah.
Thank you. Yeah. So I'm just going to get this from a software vendor's perspective, really. Initially, MTD ITSA was supposed to go live in April 2023. So this has been in development at Capium and probably with a lot of other software houses for a number of years. Us, like yourselves, are still waiting for more information to be drip fed from HMRC about certain requirements. But in Capium, we have a product ready and raring to go. We've connected to the available APIs that HMRC are presenting to software houses, so we can bring in live data from HMRC into our product. And what we really are trying to do at the moment in time is get our accountants clients to partake in the pilot scheme with us. We're finding that part of the process a bit of an uphill struggle, because why would any client want to join MTD ITSA early, especially with the administrative burden that Robert highlighted earlier. But nevertheless, I have managed to strong arm a few of our customers into giving us some clients. Alan's got away with it for now. I'll be back, Alan, don't worry. So hopefully over November, December and January, We are aiming to make our first successful quarterly submission through Capium. But also, what we're looking to do as well is create a specific product for sole traders and landlords that is really a simplified version of bookkeeping, where they can record transactions, they can scan invoices and receipts, bring a live bank feed, and that would then marry up with our self-assessment ITSA product. So I believe lots of software vendors are creating bespoke products to help accountants and their clients tackle this challenge. Robert, would you like me to give the kind of update from HMRC now, or is that a bit further along?
I think that would be useful now, where we're doing some sort of general background. So if you don't mind, Nick, that would be great.
Yeah, brilliant. So last week I attended a session with BASDA, which is the British Association of Software Development, and we had HMRC present there. And they just gave us an update of where the MTD ITSA is at the moment. So as you're aware, it's currently at the pilot stage, and we're in the first stage of the pilot scheme. This is where there's intensive hand-holding of specific types of customers to test the core customer journey. There's another 2 stages to go. And stage 2 is the gradual increase of volumes to test the product and to test the support infrastructure HMRC have in place. And then stage 3 really is a tentative go live with a much more extensive testing of the pilot scheme and a full public beta. Just to give you a bit of insight where the pilot scheme is at the moment, there's 20 software developers who are actively engaged with creating a product for MTD ITSA. And at the moment in time, whether you see this as progress or alarming, there's only been 30 quarterly submissions done at the moment in time. So there's only been 30 successful quarterly submissions. And at the moment in time as well, there's only 100 clients that have been registered for the pilot scheme. And HMRC, I think, were quite frank in saying that they want more than that, to be honest. I think when initially the timeline was posted, I think they were expecting in the thousands rather than the hundreds to be part of this pilot scheme. But they're still determined to and will hit the April 24 go live date, and they're going to continue, having these workshops with software vendors and accountants alike to continue to kind of build out this new service. They also said that shortly they're going to be stepping up the communication with accountants and end users and clients to make them more aware of what the requirements are. And crucially, they're going to actually try and post some use cases as well. So, try and give accountants actually something like tangible that they can, use to explain to their clients what MTD ITSA may look like for them. But that's it for me.
Okay, great. Thanks for that. Always good to get an insight from HMRC. Adam, can I invite a few comments from you around, how you're feeling about ITSA and, of course, your clients and your practice?
Yeah, of course. Yeah, well, good morning, everybody. My name's Adam from Partners Business Support. Much like I'm sure many of you here today, I run my own small practice, and as much as anything, whilst I'm sat in this square on this screen, in some ways I'm just as on a voyage of discovery as everybody else is here today, as the whole thing tentatively moves forward. From our point of view as a practice, I think really it's just I'd applaud everyone else for being here today, because it's going to be about preparation. We know this is going to be a bit of a bumpy ride by the looks of things, in terms of the preparedness of the market. So from our point of view, it's looking at our client base, segmenting it into who are going to be the people we need to treat differently, and basically reaching out to them and letting them know. I think they will take the message better from us than they will from HMRC. There's a lot of information out there, but I think people do obviously want to lean towards their trusted advisors. So we see our part as key in that, to flag up to these people they have an issue, that it's coming down the road, and they need to be preparing for it. But equally that we are working on a solution for them. You can view this as either an opportunity or a threat, I guess, to our own practices, and we prefer to see it as an opportunity of getting clients that are probably normally fairly reticent to communicate with you regularly to do exactly that. And whether that's through, you know, automated bank feeds behind the scenes, that means we have the data latently, even if we're not, you know, constantly talking to people, various mechanisms we all know about out there. Just we have to change our own processes and our own resourcing to be sure that, you know, we're providing the service that we need to our clients, and of course that they're going to pay for.
Okay, great. And Alan, similar experiences your side, or anything sort of wider from your side?
Again, good morning, everyone. Alan from Wood Squared, based up in sunny northwest. It has been raining, but it stopped momentarily. I think from ours, just to add to what Adam said already, is that one thing that we've started to change, or certainly I've started to change now, is being stricter, I suppose, if that's the right phrase, of any new clients that come on board that may then become clients for MTD for ITSA. And almost making sure from the outset that they know that there's going to be a change in, you know, requirements and reporting requirements in the near future. So again, if almost trying to streamline or not take on more problems than we might already currently have with clients that we're already going to have to educate and get across to doing that quarterly submissions with MTD for ITSA. We don't have a huge number of sole traders. I think we're mainly going to be impacted by the people who've got property in terms of our client base. So that's probably the major sort of homework, if you like, that we've done so far on planning side of it, is just trying to segment our client base and seeing which ones will or won't, based on their current sort of income, going to be caught within this new legislation moving forwards. So that's sort of what we've started with, and where we're sort of focusing on, really not taking on more problems than we've already got, but also then just segmenting what we've got to see which of those clients are going to be perhaps the ones that need a bit more handhold and a bit more different forms of communication, maybe to get the message across.
Yeah, excellent. I mean, there's a consistent theme there with Adam's experience as well around sort of understanding your client base in a little more detail. You know, which softwares are they using? Is that going to be compatible with the HMRC list? I've seen a couple of questions in the chat about that. HMRC, as they did with the VAT regime, will have a list of compatible softwares. As you would expect, all the main ones will be on there. It would be unlikely that there would be an option just to send a spreadsheet to HMRC, because they're expecting this to be an online regime similar to VAT. So if they didn't accept spreadsheets for VAT, unlikely to accept for ITSA as well. But please do keep an eye on HMRC website about compatible softwares. So understanding software is really important, and also how your client keeps records, especially landlords who won't see this as a quarterly sort of task to assemble all their income and expenses. They will regard that as a once-a-year process. And I think it was Adam, you know, picked up on the point about around using the bank feed to keep the software updated regularly. That's going to be a great sort of time saver for your clients, if you can get them all on a bank feed as far as you can. And it's not just the software to manage sort of your clients' sort of accounting transactions and so on. You'll need to think about your own client management systems and billing systems if you're going to move away from maybe an annual bill for preparing a self-assessment to a monthly or quarterly billing regime that your client pays throughout the year, especially to smooth out any increase in fees that you guys are seeing are going to naturally flow from this increase in workload that you're going to be experiencing over the next sort of years of MTD for ITSA. You might need to update your engagement letters as well to cover that. So don't underestimate some of the admin that needs to be done, in the background before you can sort of get your clients attuned to what's involved in MTD for ITSA. Now, again, maybe just pick up with you, Alan, in terms of communicating with your clients. I know new clients you're going to push onto the regime, but anything from your existing clients around, whether this they're nonplussed by this regime or any feedback from them at all?
Yeah, I think the main feedback from clients at the minute is that they haven't got a clue what it is. They don't really understand what the change is, because I think the communication from HMRC has been pretty much non-existent, other than to accountants and to software companies. So, majority of businesses and people we're speaking to they're not aware, that there's anything imminently going to change and what that impact might mean for them. Luckily, we've got quite sort of disciplined clients, I suppose. So I would hope that they'll be in a position where they can change the frequency of what they're doing, so that they do meet with the quarterly reporting requirements. I think from a pricing point of view, just to touch on that as well, one thing that I think that we would probably look at is the similar way that we sort of view VAT returns for clients. And we've probably all got clients. We've got some clients where they do their own VAT returns, and then in effect we check that as part of the annual accounts. So that, I suppose, will continue to be a kind of approach where they might want to do their own quarterly submissions, but we'll check at the end of the year to do that annual declaration to do any mop-ups at that point. I think the other one might be if they do some of it but want us to check the quarterly submissions, which again we do that, where some clients do their own bookkeeping but don't necessarily want to submit the VAT return each quarter. They ask us to check it before they do. And then the final one is where we do pretty much everything for them. So we'll do the bookkeeping and the VAT returns. So I think if you sort of think of it in that way, from an MTD for ITSA point of view, that there are almost three approaches I think that we can play. And then from a fee point of view, obviously the fee can vary depending on which one the client wants, whether they want more hand holding or less from that point of view. So yeah, that's probably one way to look at it. But price is going to be a factor really, because even if we only do the annual declaration and then the tax return, there's still more work involved. So there will be a review in general tax return prices anyway, I think.
Yeah, excellent. And Adam, on a similar vein, I know you touched on this, but the opportunities, surrounding any change like this, are you sort of anticipating, any drivers around that agenda?
Yeah, for sure. I mean, I absolutely echo what Alan's saying there. If we walk into this like we're going to suck up the burden ourselves, then we're going to be busy fools. I'm sure no one wants to be that. We've done some research just basically on Google searches and things, and MTD as a general search term features very, very highly indeed. So we read into that there is some curiosity around the subject, but I completely echo Alan's thoughts but there's no knowledge. And it seems to be falling to us as a profession to communicate to our clients. And I'm okay with that, because it means that we can communicate how we want to communicate in terms of a solution that we have fashioned ourselves between our suppliers and our providers and our own good selves as to how we're going to tackle it individually as practices. And so I think there's a huge opportunity to streamline clients into operating in a way that we would prefer them to operate. There's also often two schools of thought out there, isn't there, as to how we operate as practices, whether we are the ones that conform to their way of working, or do we bring them to ours? And generally speaking, I bet it's a mixture of the two. But I know which one I would prefer. And so, yes, it's easy to educate new clients as they come on board. This is how we do things here. And that's all part of your onboarding. So I see a huge opportunity there, and to bring them on in a certain, as Alan alluded to. But equally, the hard part is going to be re-educating the existing ones, the ones that have always done things a certain way. And I think the way we're going to view it is, we're here to support you, we're here to help you, but ultimately it's your responsibility. I'm not going to have sleepless nights while somebody else doesn't provide me the information that they need to stay compliant. So that's all about your terms and conditions. That's all about any service levels that you present to people and the expectation of the service they're getting back from you. And I think as honest professionals, we can always suck up too much. So I'm viewing this as an opportunity to further streamline how we do everything we do, because we are information processors as an industry, aren't we? So there's a degree here of using the government. If the government are going to force it upon us to communicate their initiative to our client base, then okay, let's do it our way then, and then to our.
Yeah, exactly. And there are certainly opportunities for some of your larger clients who may have, regular bookkeeping needs, to sell more add-on services around there. And it's also, looking at the future with your clients, who may be looking to dabble in things like a landlord business or another trade, and they need to think about the impact of that on their engagement with you and the capacity you need to deliver on that, and always price it correctly. We'll wholeheartedly agree with that as well. Now, in terms of actually delivering this, clearly just picking up on the capacity point, I think, every practice should be looking at its internal capacity to deliver not just the self-assessment regime, but also any additional services of a compliance nature that go alongside that. And I picked up that maybe that monthly bookkeeping services and things like that. And maybe an opportunity to evaluate your workflows. Are they the most effective to deliver what you need to do on this, going forwards? The monthly bank reconciliation for your clients and associated bookkeeping, it's always a useful opportunity to touch base with your clients and just find out a bit more about their business and their sort of business plans for the future. And maybe a little bit more in depth, but I think it's certainly worth looking at opportunities to test your end-to-end workflows with a client, just to get them into the routine of keeping digital records, that routine of you checking those digital records and then rolling that out across the rest of your client base. And again, I'll just pick on Alan for that sort of thing. Is there anything you have in the pipeline to test this out with a willing client?
Not necessarily in terms of using the pilot as such, because I'm not keen to use something that isn't yet working correctly. Sorry, Nick, I might change your mind over a beer or two in due course. But yeah, I think from our point of view, we're just trying to see what solution is the best solution to offer to clients, because I think the worst thing that we could do at the moment is start them on one process and then have to change that to something else, however willing or not they are. Because generally speaking, I think certainly for the clients that we deal with in this space, there'll be people that this isn't their main source of income. There'll be landlords, but they'll also be either full-time employed or they might have another limited company that they're working on. So this isn't their. I think we need to appreciate and definitely be sort of open to the fact that this isn't their main source of income, and it won't be something that necessarily they want to in their mind maybe waste time on to maybe get something right whilst we're getting something right. So I think that for us it's really important just to get that work in almost in a dummy sense first before we then go through that with a client first and foremost. And as Nick suggested, there's so many solutions there at the moment which are kind of either coming to the market or are already on the market, and I think because we have still got 18 months if you like to obviously don't want to leave it to the very, very last minute, but we also don't want to be too early and then end up with a solution that maybe isn't the best fit for our clients in the long run as well. So it is going to be, it isn't something we've done live or with a work through with a client, but it is, if you like, a sort of a case study kind of approach that we're trying to work at the minute. What would this look like in this scenario? Would this software or would this solution work? And if not, what would it need to do, and what would we need to change on our workflows to make it work?
Just to jump in quickly, so the accountant who's going to join I hope he's going to join our MTD ITSA pilot scheme. I had quite an in-depth discussion about how he's looking to manage it, and essentially he's just going to treat it like a light limited company, where that they're going to be contacting the client or having conversations with that client on a monthly basis. So, and they will do the transactions and the reconciling of those transactions on a monthly basis as well. So they, from the one touch point a year, they're going to change it to a monthly touch point. Also, just on the point of bank feeds as well, one of the things that he said that he's doing is a prerequisite really to becoming one of the clients is setting up a business account or have business bank account or having a private bank account that has transactions related just to, say, the landlord's income or the sole trader income, okay? So that you're not having to go back and forth with the client with their personal expenses or having to kind of unpick hundreds of transactions when there's maybe only 10 that are relevant to do. And on the topic of pricing that I think Alan touched upon as well, I think one of the real positives, if you can see it as a positive, is you as your accountancy firm are not doing this by yourself. Okay, this is affecting, the whole industry. As HMRC said, this is a once in a generation change. So if your clients can't stomach the price increase, I'm pretty certain that ITSA is going to kind of put a nail in the coffin to that kind of race to the bottom for the, say, £150 self-assessment return. Okay, so you will find that the client might not like your prices, but if he goes elsewhere, they could be hit with an even steeper price increase, and who could have even more rigorous requirements for them to do. As Alan was saying, he's kind of making sure any clients who join him now, they've got to maybe have some competency with bookkeeping software, or update that on a monthly basis as a prerequisite to being their client. So I think clients will soon start to realize that maybe the grass isn't always greener, and maybe having that existing relationship with their client and maybe the price increases that will inevitably come along, has something they can stomach. But I think I also just want to touch upon Adam's point where he says opportunity. I was having a conversation, I speak to accountants all day, to another accountant this morning, for my sins, was that they're seeing this as an opportunity for them to become a finance director for some of these businesses. So instead of like the horse is already bolted and they're just kind of rubber stamping a self-assessment return, they can actually give real-time advice, add real-time value to their clients. And I think this is the opportunity that is going to arise for some accountants. So instead of it just being that one return a year, it's really an opportunity to kind of broaden the horizon of this service, and it's an opportunity for you to increase your fees for it. So yes, the administrative burden is something that will give everyone headaches. But if you start making small incremental steps now, looking at different software vendors, segmenting your client base about their technical abilities, and I really think when it comes to April 2024, I think you should be ahead of the curve. I think sticking your head in the sand and for such a seismic change, I just think won't cut it. But sorry, that's 2 pence.
No, that's really useful. And in fact, some of your opening remarks, Nick, we're bang on, because as accountants, we should always be looking at what's the best operating framework legally for the business. And it may well be some sole trade businesses will want to incorporate as a limited company, and of course that brings additional burdens, but it may actually be better for them from a tax point of view, and also on an administration point of view as well, if they want to go down that route. So not to say anyone to suck eggs, but you really need to look carefully at individual client circumstances to see what's the best framework for them to operate in.
And just to add to that, Robert, if you're thinking it as a process, right? For a limited company, there's 4 quarterly VAT returns, and there's the submission of the accounts, and there's the CT filing. So that's 6 filings, right? I think you can almost copy or slightly reduce the workflow that you're doing for limited companies at the moment in time. You will be able to mirror a lot of those steps that you take. And I think there's lots of people kind of, I think firstly, just looking at some of the questions that are arising in this chat, there's still a lack of knowledge about ITSA. That is apparent. And how to price it, I think, will become more apparent as you maybe get familiar with a process on how to deal with it. Are you going to do it on a per transaction basis? So I think you've already got some of the tools that you're using already in your firm. Just think about what lessons you've learned already, or based on the services you provide already, and maybe copy or replicate some of them, and maybe apply some of those pricing models to that. But be flexible with your pricing. See what works, see what doesn't work. This is as with all things in life, it's going to have to take a bit of an organic evolution. until you get the right pricing. And then once you're comfortable with it, then stick with it. I don't think there's going to be one shoe that fits all, because there could be one person with one business, one property. There could be one with 15. And that's going to require, as Alan was saying, about the level of how involved that client would want to be. That could require a lot more effort from you. So I think you've got to think about maybe 3 different services: one for the full end-to-end service, one for kind of the client does some and you do the rest, and the other is that the client is really taking a admin heavy approach to it. They're doing all the bookkeeping, almost submitting the quarterly returns as well, but be dangerous, and using the accountant just does the final submissions. So I think maybe thinking up costings based on those 3 service models would be a good starting point. I don't know, Adam?
Yeah, I think I'd add to that. I think one thing, perhaps sometimes we overcomplicate things as accountants, because we probably already bill business clients for bookkeeping. So whatever rate or however you quantify or calculate that bookkeeping fee for a business client, apply that exact same process for how you're going to charge bookkeeping for an MTD for ITSA client, whether they're a property client or a self-employed client. Same thing, I would say, as a guide, maybe if whatever you charge for a VAT return, perhaps charge the same thing for the quarterly submissions, and then possibly increase your annual, to take care of that annual declaration, maybe another VAT return. So it's almost like 5 VAT returns if you do the whole bit for them plus the tax return at the end. I think that might be a way just to try and simplify the process down slightly from a pricing point of view, rather than to try and come up with a whole new kind of menu of things that again, so what we're currently doing. But I think the key thing for me is that, and Adam touched on it really earlier as well, is that be really, really clear with businesses what they don't want you to do and what they do want you to do, and be clear that that's documented somewhere, because if they get into trouble or they submit things wrong because they've said they were going to do it themselves, you want to be able to say, well, actually, you said, this is, we asked you, you told us you didn't want to do it, and this is what you chose to do. So I can see that being a really important step of this process. And also, don't take on work you don't want. Just like anything else, I know if you've got a client that's maybe messy, and you maybe don't want to even think about offering them the full service with the bookkeeping and the quarterly submissions, it's bad enough doing the yearly submission maybe for them. That might be an opportunity to partner with someone, and whether that's taking on the resource from Initor so they can do that processing, whether it's another party that you want to partner with, whatever that is. But as accountants, we're always there trying to help people. We love to help people, and sometimes that goes against us because we help people when actually perhaps either we're not getting paid for it, or actually they don't value the help anyway. So don't cause yourself those sleepless nights that Adam sort of was mentioning because the client isn't bothered. Just try and pick your battles, and work with the good clients.
Okay, so in the lead up to April 2024, there's quite a few questions in the chat about chronology, etc., and I'll try and pick that up as well. But just thinking about the 22-23 self-assessment return season, HMRC will look at those returns at the end of January 2024 and check if there's any qualifying income over £10,000. So they'll do a general sweep. If the threshold is met, HMRC will write to your client and say, we think you fall within the MTD for ITSA regime, and that will be in advance of April 2024. So if you're the client's agent, you can meet the requirements on your client's behalf by checking their qualifying income and just reassuring them whether they're in or outside of the regime. You need to identify the softwares, as I said in my opening remarks, and then as a client's agent, you will sign them up for MTD for ITSA, much in the way you did for MTD for VAT. So you still have a client agent account that you can access and use for this new regime. In terms of the chronology, I'll just go back to an earlier slide. I won't go through it because I'll probably make a mess of it. But you will have 4 business updates each quarter throughout the tax year. So that takes you up to 5th of April in the tax year. You will then have the period of time up to 31st of January to prepare the end of period statement. So use that time to check the updates that have gone through on the software and to make any adjustments in that end of period statement. And then once your client is happy with that statement, that the estimated tax is the correct amount and all the transactions are in there that should be, you then file the final declaration in much the same way as you did a final self-assessment. So you can see where the touch points are throughout that sort of 18-20 month period from the start of the tax year right through to the final declaration as well. So again, it's familiarising yourselves and your clients with especially that end part of the process, which is where the tax is calculated and then submitted to HMRC as the tax due for the period. Now, in terms of what you can do in checking your client's qualifying income, just talk to your clients, use your available records, review the combined income the client receives in a tax year from self-employment and property income. Check whether they hit the thresholds or not. HMRC will assess this in 22-23 before any qualifying expenses are deducted. So remember, it's the gross amount. It's not the net profit for your sole trader. It's the turnover for your sole trader. Always the gross amount. And then check all the other sources of income for your client's self-assessment, such as income from employment, dividends or savings. These do not count towards your client's qualifying income for ITSA purposes. These other income sources will be reported either using the compatible software, if it has the functionality. And again, that was a question, I think, on the chat, whether you have to include dividends, etc. Yes, you can file that amount with compatible software, but it's outside of the ITSA regime. And it's also worth checking your client's accounting period. If it's longer or shorter than 12 months and HMRC has the necessary data, HMRC will annualise the qualifying income. And I responded to a question in the chat about exactly what annualised means, though of course always keep an eye on how HMRC is using that methodology to check your client's income. So that's all I wanted to say on the practical steps. Just a sort of a final concluding remarks about how the group's feeling about ITSA. Getting sort of different vibes, if you like. I think as accountants, we're probably comfortable with the regime. We understand what we will need to do going forwards. Maybe a bit uncomfortable about some of the conversations we'll need to have with clients and getting sort of any changes to fees and the way we collect fees around sort of whether it's a monthly basis or a once in a year basis as well. I think lessons from the VAT for MTD. You can certainly use your agent account for that for the self-assessment tax return regime as well. I would urge you now to take action to identify those clients that are going to be caught by this regime. I wouldn't put it off until the deadline is looming. And with that in mind, we will certainly run another webinar next year, probably after sort of the start of the tax year, just to remind you, what's happening with MTD for ITSA. We've touched on some of the other services you might be thinking about for your clients. Please do keep us in mind if you're looking to outsource any of your sort of bookkeeping or even self-assessment services. We're well capable of providing those services, and we're happy to have a conversation with you if you want to get in touch with us. And here's some contact details. That's my email. Feel free to contact me directly. We also have the Initor inbox. You can contact us there. Have a look at our website, familiarise yourselves with our services if you're interested in that at all. And of course, we have a phone number if you need to use the old school way of communicating with us. And if you attended today's webinar, there will be a deduction of 10% on your first year's fees. I'm on LinkedIn. Please do feel free to contact me or link with me in LinkedIn. I'm happy to take any questions outside of the webinar, if that's what you prefer to do. So just a massive thank you to a panel today. I won't leave the final word with me. I'll ask you individually for any final remarks. Nick, if I could start with you.
Yeah, I think just as I was typed on the public, I think self-assessments or self-assessment season and the returns have long undervalued the role of the accountant. And once I think we get round the administrative burden and the processes that MTD ITSA involve, I think this is a great opportunity for accountants to reassert their value and not be paid a couple £100 for a filing, but have a more consistent recurring income from that. So I see it as an opportunity for accountants.
Excellent, very positive note to follow on. And Alan, any final remarks from you? A chance to say a bit about Wood Squared as well?
No, I think people have heard enough about that. But no, I think just for sort of tips really for people to take away that's on the call. Really, for me, the first thing you really need to do is just identify within your client base which clients are going to be impacted by MTD for ITSA, because that will then allow you to identify what resources you may well need for your business, and then you can think about how am I going to fill that resource gap between now and April 24. That might be with outsourcing with Initor, that might be through recruitment, it might be through deciding actually we're not going to get involved in that work and maybe we concentrate in other areas. But I think that those two steps are really, really crucial for you to really understand what the impact of MTD for ITSA is going to have on your practice and your clients. And then you can properly start to plan for it moving forward. So I'd really urge everyone to do that. Definitely an opportunity if you present it in the right way. And not all clients will say yes, but enough will. And they're the ones really to try and help going forwards through this process. So that would be my final point.
And Adam, final word from you, and maybe a little bit about Palmer's if you want to.
Yeah, thank you. I mean, going last, all I get to do is echo everybody else. But no, there's really good points being made that I've probably said already. To my eyes, it's an opportunity, but not necessarily an easy one. And they never are. I agree with what Alan's saying. We have to segment our client bases so we know what's what, communicate with them to tell them what is coming. The sooner you do that, the easier the conversation gets. How do you boil a frog? You have to do it gently, and so it's going to take a little while. And then be ready with the solution. That's your solution. My recommendation would be to every other practice owner out there is, do it your way. Yes, you'll lose some, but you'll win more, and the ones you keep, you'll make more money from. So, we're accountants, work it out. That's how I view it. Every regulatory change the government ever passes down should be an opportunity for us to make more money as accountants. Yeah. If we play it right.
Brilliant. Okay, so ladies and gentlemen, I'll close the webinar there. So if you want to log out, you're very welcome to do so. And we'll run another webinar very shortly, maybe not on this subject, but certainly in April, we'll revisit this subject again. So thank you. I'll close now. I'll stop recording. Thank you.
I was just going to say, did we address those Q&As that have been published? There's just a few questions that have come in.
So last one, company director. Oh, hang on. Company director, also landlord, had to submit 2 self-assessments. As I mentioned, the compatible software should allow him to disclose other sources of income, which will be part of his annual self-assessment regime. They can do it through their online services account.
Robert, if you go to see in the right hand side, there's a bit that says Q&A, and if you go published, there is 3 or 4 questions that have just they've been popped in through the course of the webinar.
Yeah,
and we have a few more minutes, so maybe if we could rattle through them, that would be great.
Okay, so I think I've picked up. I'm looking at the right hand banner at the moment. Does dividend income also go on the quarterly ITSA submissions? Well, no, dividend income's outside your sole trade business and outside your landlord business. So yeah, that's not part of the submission. So that's excluded income.
So I just one was, if we have a sole trader client who also has a limited company, does their incorporation of all their income does that then incorporate all of their income quarterly in the quarterly reporting?
No, the limited company is outside of the regime. The regime's for unincorporated businesses and landlords.
Brilliant. Also, are non-UK resident landlords with a turnover of over £10,000 required to go on the ITSA?
Short answer is yes. That'll be an overseas property disclosure. I would imagine, I haven't seen this, you'll probably see it before me, Nick, that there'll be options within the software to say, which type of income that you're going to be reporting, be it UK property, overseas property, or from a self-employed business.
Yep. And the final one from Chris Marlowe. Does a higher paid employee with a rental income under £10,000 send in a normal self-assessment return?
Short answer is yes. If they're not caught by the regime, it'll just be part of their normal disclosures on the self-assessment.
Brilliant. Thanks for that, Robert.
Okay.
Cheers, everyone. Thank you. Have a great day.
Thanks to the 82 who stayed to the bitter end. Thank you.
Cheers, gang.
Thanks.
Cheers. Bye-bye.
Bye.